It begins long before the crash, before the sirens. Before the moment your life changes on a highway you've driven 1,000 times. It begins with something quieter, something invisible, a number buried in an insurance database. A rating you've never seen, a premium you didn't choose. And somewhere in America tonight, a driver is about to learn what that number really means. A woman in Missouri who has never filed a claim steps out of her car trembling after a minor fender-bender, no injuries. Barely a dent. She thinks the worst is over. It isn't. Her premium will rise by hundreds next year. She doesn't know it yet. But the real collision hasn't happened on the road. It's happening in her wallet. Meanwhile, another driver in Washington has the same accident, yet pays less the following year. Not because he's luckier, not because the system is kinder, but because he understood something most people don't. The cheapest car insurance in America is not a company. It's a strategy. And if you know how to use it, you can keep $500 a year in your pocket, instead of handing it to an insurer who never tells you why your price keeps climbing. Because this world, our world of American car ownership, has changed. Inflation hit the repair industry. Medical payouts soared. Labor shortages stretched repair timelines. As costs rose, insurers raised premiums faster than any other year in the last decade. Drivers in Texas saw jumps of 18%, in Florida sometimes 30%. And across the country, every day people woke up to bills they couldn't explain and definitely didn't expect. Car insurance isn't just a bill anymore. It's a financial pressure point that quietly shapes your entire life. Your budget, your emergency savings, the choices you make every time you turn the ignition. But once you understand why premiums rise, which behaviors insurers reward, and which companies are quietly becoming the cheapest in 2026, you gain something rare in this industry: leverage. And leverage means savings, real savings that work whether you're a new driver, a family of 5, a commuter, or someone who barely uses their car anymore. Start with the truth that every driver eventually learns. The cheapest insurance is almost never the one advertised the loudest. It hides behind data-driven programs, telematics, usage-based pricing, low-mileage rewards. A delivery driver in Ohio installs a telematics device assuming it won't matter. He drives smoothly, avoids hard braking, and earns a stunning 25% discount. A software engineer in Oregon works remotely and signs up for a pay-per-mile program, cutting her annual premium nearly in half, simply because she drives less than 6,000 miles a year. These companies aren't just cheap, they're fair. They judge how you actually drive, not where you live or how old you are. State Farm, Geico, Progressive, Nationwide. And a wave of newer competitors are shaping the 2026 landscape with pricing that rewards behavior instead of assumptions. And for millions of Americans, these programs are becoming the most reliable way to save hundreds without sacrificing coverage or protection. But the biggest savings are often hidden in places drivers overlook: the make and model of your car, the safety features installed, the deductible you choose. A mother in Arizona increases her deductible from $500 to $1,000 because she has a small emergency cushion and instantly saves $300 a year. A student in Minnesota adds a $20 anti-theft device recommended by his insurer and earns a discount worth 10 times that amount annually. A family in Nevada bundles auto and home insurance, not because the commercial told them to, but because the math makes sense. They save nearly $450 a year by combining policies. These aren't drastic lifestyle changes. They're small, targeted moves that stack like bricks, each one adding stability, resilience, and extra dollars back into your pocket. In a country where repair costs continue climbing and claim severity rises year after year, these small shifts aren't optional. They're strategic necessities. Then comes the moment many overlook, the moment where loyalty costs more than switching. A driver in Pennsylvania has one minor claim and watches her longtime insurer jump her rate by 22%. But when she compares quotes, 2 competing insurers offer to cover her at a lower price than she paid before the accident. Why? Because insurers value risks differently. Some compete aggressively in your state. Some don't. Some punish minor claims. Others barely respond. And the difference isn't small. It can be $500, $800. Even $1,500 a year depending on where you live. Drivers in Florida, California, Michigan, and New York often see the widest gaps. And here is the secret: The cheapest insurer for your neighbor is almost never the cheapest for you. That's why the smartest Americans compare quotes yearly every 12 months, without fail, not because they enjoy the process, but because the savings are real, predictable, and worth it. And now, after a landscape of rising premiums, hidden discounts, state-by-state chaos, and companies reshaping how risk is priced, we reach the quiet truth at the center of it all. Car insurance is not fear, it is protection. The cheapest insurance in America is not the bare minimum that leaves you exposed. It's the policy that shields your future without draining your present. It's the one built intentionally, chosen strategically, reviewed regularly, and adjusted to match the life you're actually living. In a country where one unexpected accident can unravel months of financial progress, knowledge becomes armor. Awareness becomes power. And the moment you stop letting insurers dictate your price and start shaping it yourself, you step into a different kind of financial freedom. One where emergencies don't destroy you. One where protection doesn't punish you. One where your wallet and your future finally align. Because at the end of the day, saving $500 a year isn't just about money. It's about control, and today, that control is finally yours.